Stocks, high-yield bonds, and gold all hit records. The market is already lowering the interest rates because the bonds are going up in price. Now, next week there will be a Federal Reserve meeting, and I was wondering if they will be lowering the interest rates, and we'll try to find out, looking at the charts, what they will do. And we will do a trade example for Warner Brothers Discovery. Also, they just went up strongly because of the merger news, so stay tuned on how we traded the stock. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, September 12th, 2025. As always, please like, share, comment, make any comment in the comment section. This will help the algorithm to know that the video is important, and it will boost it higher. So thank you for that. If you are a subscriber, stay tuned. We'll be covering various securities such as ETFs, large cap stocks, various speculative securities. This time around we have several new additions such as Array Technologies, Chemours, Esperion, Medical Properties Trusts, among others, as well as Aurora Cannabis, Bright Minds Bio, and Compass Pathways, which are psychedelic firms. So stay tuned for that. As always, I'll be using my proprietary Master Charts Trading price action indicators, which you can see on this chart. There's green, blue, red, and yellow lines. So S&P 500 continued with its regularly scheduled new record highs. I have shown this chart in the past, but let me show it again. So this is a weekly chart of S&P 500, a little bit of a longer term sort of thing. And I've shown this in the past, showing that this V-shape price pattern that started in January of this year, was middle of it, was in April of this year, and ended in June of this year with a breakout above this pattern. So V-shaped reversal with a breakout. The depth of this pattern is around 1,300 points. And so we are expecting a duplication of this pattern to the upside. So we are projecting S&P 500 somewhere within 7,500 area. When it's possible that we'll get it by the end of the year, but it is not very likely. So we will see, what happens. Especially September is kind of weak months normally, but you never know. Sometimes those seasonality figures are really not that. Sometimes they work out, sometimes they don't work out. So September sometimes is a pretty good month. But overall, we could see S&P 500 at 70,500 by the end of the year, or a little bit later. We obviously don't know, but the point of the matter is that is the target of where S&P 500 is very likely going in the near term. On a more granular level, daily time frame, again, all-time highs. Pullback could happen, but we haven't seen one really in a long time. Stocks are very overbought, but at the same time very strong. By extension, very bought means strong. Very overbought means very strong. So we're watching again S&P 500. We're looking for opportunities within the stock universe for any stocks that could be of interest. And you can see that we have various securities that we trade, so stay tuned for that. High yield bonds also hit an all-time high. So again, I wanted to show this chart. High yield bonds, correlation of high yield bonds to the S&P 500 is normally quite positive. So notice down below here is the correlation coefficient, and by and large this correlation is very high. So when high yield bonds hit all-time highs together with stocks, that means that there is no divergence. Stocks and bonds are moving together in lockstep. We want to see that, so we will continue again looking for opportunities to buy stocks within the stock universe. So two things that are very good, I think. this week so far is that both stocks and bonds hit records. High yield bonds rather. Stocks in general are considered a good hedge against inflation. So yes, when we hear the word inflation, we think stocks going up and high yield bonds going up. These are riskier assets than, for example, other securities such as treasury bonds of the United States. So right now there is a huge debate about whether or not the interest rates will be lowered at the next meeting, which is next Wednesday, the 17th of September of this year, 2025. And so we want to see what are the charts telling us about whether or not the Federal Reserve will lower interest rates or leave them as it is. Now, what I understand is that the Federal Reserve is widely expected to lower the interest rates, but as I just showed, the inflation expectations are running higher than Federal Reserve prefers. However, we have pressure from the executive branch for the interest rates to be lowered. So now I wonder whether or not Powell will cave into Trump's demands and indeed lower the interest rates. Obviously, make a comment, see what you guys are thinking. Currently, we're looking at 10-year Treasury note yield. Okay, 10-year Treasury note yield is probably the most important Treasury note yield in the United States, because basically based on this number, many of the loans and credit cards and mortgages are structured, and consumers take out those loans. So what we're seeing on this chart is first of all this blue support resistance line, which is at 4.36%, which was finally or decisively broken where I'm hovering on the 1st of August of this year. We had a little bounce towards it again, but then we got sold off. And now we're actually, the 10-year Treasury note yield is hovering around this red support resistance line, which is at 4.06%. Now on a daily time frame, this is a daily time frame, you can see that we did break below it, we closed below it on several occasions. However, if we look on a weekly time frame, we actually did not break below this red support resistance line, which I keep referring to. So right now we're looking at the weekly time frame for 10-year Treasury note yield. And notice what happened. Notice that the price has pierced below this red support resistance line. Remember, this is a weekly chart. Each candlestick is a week's worth of activity. And it pierced below here, below the red line, but did not close below this red line. So technically speaking, we don't yet have a signal to buy or to sell this interest rate. You can't really trade this interest rates, but we can do the opposite. We can be buying treasury bonds. And indeed, we have been buying treasury bonds. And for example, IEF, these are treasury note bonds. And you can see that this is the treasury bond ETF rather. You can see that we've been moving higher and higher, and we've been basically buying it every time we touch the blue support resistance line. So the interest note yield, TNX, is at a very precarious sort of situation where it sort of landed right around this very important support resistance line at 4.06%, yet it didn't really close below it on the weekly time frame, so we cannot yet decisively say that the interest rates will continue lower. And as a result, it's difficult again to say at this point whether or not the interest rates will be lowered and by how much. The markets are widely expected for the Federal Reserve to lower the interest rates. However, the way this chart is showing things to me, it's not yet a done deal. So there is a small chance that there will be not a interest rates lowering this Wednesday. Make a comment, tell me what you think. Let's continue on. So I mentioned that gold indeed had hit a all-time high. This is an gold XAU divided by USD on weekly time frame. Again, notice where those arrows are right around the blue line. So we basically buy right around the blue line. Find out more about the indicators at the website that I'm circling right now, and also the link in the description, MasterChartsTrading.com. So again, notice the way that gold has just took off into the stratosphere. It's more than doubled in about a year and then about 2 years. So definitely inflation expectations are impressive and they're baked into gold. And again, I am not 100% that the interest rates will be lowered on Wednesday this year, of this next week. So we'll see again where this goes. But the way gold has been going, the inflation seems to be running pretty high. So I am not 100% that they will be lowering the interest rates. This is dollar currency index, DXY. The July 24th low is still holding, so we have not yet seen a retest of that area. If we do break below it, the new lows are almost guaranteed. So the dollar currency index, there's almost a guarantee that if we take out the July lows, we'll be continuing to new fresh 3 to 5 year lows, about 3 years lows, if we break below the levels that I just mentioned, July lows. So for the dollar, dollar continues to slide, gold continues to gain. Makes perfect sense because gold divided by US dollar. So gold is gaining as dollar weakens. Gold miners also outperformed pretty much everything under the sun. This is gold miners, GDX. Notice on this chart, once again, opportunities to buy right around the blue line. So every time we touch the blue line, we basically buy it there. Currently, it is so overextended. I mean, notice just how strong this move up. You got several gaps here for gold miners. It just gapped up several times, non-stop. Now I am wondering if finally we are approaching some sort of a top-in pattern for gold miners. And a pullback could be around the corner, but then again, I was saying that a while back as well. So to sell short such a security, which is just going up like crazy, is quite difficult, because you need to really catch the top, and to catch the top, well, it's basically impossible. I mean, the way this GDX thing is going has been, 6 weeks of non-stop appreciation with gap ups the last 2 weeks. So it's very strong move, but now I don't know. I wonder if we're done. I think we might be at least consolidating the gains and maybe even pulling back, especially if Wednesday decision by Federal Reserve disappoints. So that would be something, wouldn't it? Anyways, gold miners are extremely overextended. I would be quite cautious right now with buying any gold miners. In fact, I normally cover at least one or a few gold miners, but notice this week I have 0. So what that means is that gold miners are really very overextended and there was really no good opportunities. Finally, let's look at a stock that was recently traded by, this is Warner Brothers Discovery, and Okay, so I just wanted to show you how to think about, you know, the stocks and how to trade them basically. So on this chart you can see that this security was trading below the red line, almost went down to the yellow line. So when it goes down to the yellow line, that means that the stock is definitely no longer of interest to us. It's in a downtrend. But it kind of held on here back in April of this year, 2025, and started rising ever so gentle. Finally, where I'm hovering around 11th of June, in mid-June, stock Warner Bros. Discovery broke out above this blue support resistance line and finally continued higher. This is actual alert back in June of this year. Another opportunity to buy potentially was a few weeks later in August of this year, in mid-August of this year. So if you did get in on that opportunity, congratulations, because just yesterday the stock skyrocketed like 15-16%, and today it went another 16% higher. So very big move by the stock Warner Bros. Discovery. Did we know about it? Obviously we didn't, but we did know that we should be buying it and we should definitely not be selling it short, and we should be looking for opportunities at the lower risk entry. So the lower risk entry is right around the blue line, and this is exactly what we did. We went alerts were sent out, so congratulations again. If you bought this recently, most likely there will be, you know, talk about consolidation. I keep hearing about talks about between Skydance and Warner Brothers. So looks like this is happening indeed, and stock skyrocketed as a result. So again, congratulations if you opened. If you haven't yet opened, consider signing up to get the indicators at MasterChartsTrading.com. And that's it for this week's recap. Please head over to MasterChartsTrading.com, click on sign up one of the products. So again, I have the trading indicators, these lines on the chart, this green, blue, red, and yellow line. They're available for TradingView.com. You can have the same lines on your chart and you can trade various securities, just like I'm showing you here on this chart, without thinking too much. Just simply put on the indicators and trade. And explanations are available and the instructions are available. If you don't need the indicators, you can simply sign up for the newsletter. So I sent out daily alerts about various securities such as ETFs, large cap stocks, speculative securities, various drug related like cannabis and psychedelics, as well as gold related securities that I send out daily alerts on those and the weekly members only videos. And of course, the best deal is to get both trading indicators and newsletters. And the best deal of those is to get the yearly subscription. So the equivalent of that is $49.95 per month versus $59.95 per month for the monthly subscription. So you get 2 free months with the yearly subscription. All the subscriptions come with free 7-day trial. So sign up. You have free 7-day to try it out. If you don't like it, always can cancel. That's it for this week's recap. Don't forget to hit the like button, share this video, make a comment, and thank you for watching. Have another great trading week. Bye-bye.